watching Bloomberg Quint live here from the World Economic Forum's annual summit. It is day 3 and I'm joined today this morning by Neeraj Kanwar of Apollo Tyres. Neeraj, thanks very much for speaking with us.
Thank you. Pleasure.
What's the demand situation looking like back at home?
Well, I think, post-Diwali, commercial vehicles have come down.
Yes.
Passenger car vehicles have also come down. But I think that's just a short-term blip. I'm a very optimistic guy and I believe that this will come back up. Given that April 2020 we have the BS6 coming in both the vehicles, I think there's going to be a demand surge coming in very soon. We're just waiting and watching. I think coming this year, 2019 is going to be a good year.
Okay, so can you give me some idea of what you expect demand to be like either for the calendar year or for FY20?
Well, I think, as Apollo is leaders in the truck segment in India, we are clearly 30% market share leaders in truck radials. Currently I see a demand-supply situation for our own tires, whereby demand is much more than what we can supply both to the OEMs and to the replacement. I believe that we should be looking at a double-digit growth in 2019, both in the commercial segment and in the car segment.
Okay, how is the replacement segment shaping up?
Well, replacement for us is very good. We have increased our footprint in India with adding a lot of close to 1,000 new network dealers in the rural areas, which is where the growth is going to come.
Okay, and input costs is the other question I wanted to put to you again, what the outlook for the year is like and how that will play out in your margin performance, which has been reasonably good. You've managed to moderately improve margins and maintain them at about the 11-12% level. Yeah,
so input costs, currently rubber has softened, oil prices have softened as we know. So input costs are down. We're waiting and watching. I can't say what's going to happen in the coming year. There's a lot of economic downturn in various other countries, so we really have to see how both rubber and oil prices play up. As far as our margins are concerned, we always look at a double-digit margin. We are a company that keeps on investing back in the organization, in R&D and in brand building. Our biggest challenge coming forward is going to be how to create a new brand with Sachin. We've tied up with Sachin Tendulkar recently, and to try and see how we can project that to the next level and take Apollo to the next level.
So if you're saying input costs have come down, and that did you expect those to sustain, and therefore do you think you might in fact be looking at price cuts across certain categories of tires?
No, I think that's too soon to say.
Too soon to say?
It's just happened. So in Q4 we'll be seeing a little bit margin expansion, but in the longer term I can't give you guidance about what's going to happen in input prices.
Okay. What about your growth strategy and inorganic strategy, if there is any one on the anvil right now? Though I must say that everybody here seems to be a little bit more gloomier about the global outlook.
Yes.
So, I don't know if you're looking at international opportunities. We've been there and discussed that here in Davos a few years ago. But I thought I'd bring it up again.
Inorganically, no, we don't have any plans currently. As you know, we started our production in Hungary in 2018, which is going very good. We are reaching peak capacity by 2019. So the challenge is going to be how do we sell that output into Europe, which is getting interesting for us, challenging. Recently we started supplying tires into VW, we started supplying into Audi, into Ford in Europe. So that's a good start for the Hungary project. We also recently announced a greenfield in Andhra, which is another new journey for us in Andhra, given the demand situation that's happening in India and the way we are seeing the growth happening in India, especially for our branded tires. I think Andhra is going to be very interesting for us. So as far as growth is concerned, India will keep growing. We have to keep on strengthening our footprint in Europe, which we are trying to do.
Okay, so it looks like a year of consolidation for you, 2019 and parts of 2020 in that sense.
Well, consolidation in that sense because all capex is coming in now. We had a Chennai expansion, nearly doubling our capacity, so that producer is going to come into the market. So it's now to sit back, consolidate, try and gain on our capexes which we've put in the past 2 years, and then look at a new production facility in Andhra coming up in this.
Okay. One final question, Neeraj. You all ran into a pay issue with your shareholders, and at that point, I think you all decided finally, because it didn't get shareholder approval, that you were going to look at a revision in pay for FY19, if I remember correctly. Was that a bit of a governance wake-up call for you all, and how are you looking at being able to communicate better to shareholders many of these issues?
I don't think it was a wake-up call. I think it was a very good thing that the investors spoke their voices to us. We heard them.
Okay.
The board revised the compensation. And now the investors have given us approval and business is back to usual. And that has just gone back, and I think it's a good thing that the company has been very transparent, very communicative, and have heard the investors on what they have to say.
But has that changed your remuneration policy substantively for the future? I mean, for this you now have approval.
Yeah, we have a revised policy,
you revised,
and yes, going forward we'll be looking at it.
All right, we'll leave it there. Thank you so much, Neeraj, for speaking to us.
Thanks.